Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Palantir stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 36 billion market cap. They're trading at $17 a share and they have 2.2 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have a negative in 2020, but after that it's been positive, so that looks really good. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was negative in 2020, 2021, and 2022, but it's positive for the first time in the trailing 12 months. Things are really looking up. Revenue is a sales for the company, and that doubled from 2020 to the trailing 12 months. They're over $2 billion. Their revenue grew 41% from 2020 to 2021. Then only 24% into 2022, down to 12% in the trailing 12 months. That's a pretty weak revenue growth. You want to see 30 plus for a company like this. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 25 billion. We discounted the numbers back to today using the weighted average cost of capital, and we get a value of the company of $21 billion. We divide that by 2.2 billion shares. And we get a calculated stock price of $10. They're trading at $17, so they're trading at a 71% premium. It's a sell according to the model. I think I was fairly aggressive with their future free cash flow growth, up to $1.7 billion in 2026. That's almost 4 times as much in the trailing 12 months. But as you know, the stock price is not based off of the fundamentals or of the free cash flow. It's based off of supply and demand of the market. There have been some stocks with this amount of free cash flow that are worth $100 billion. Then there's some stocks with this amount of free cash flow worth under $1 billion. Their stock price is based on market perception, what investors feel the company will do in the future. There are 145 companies in the same industry as Palantir, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't really spend much on CapEx. Software companies tend to spend very little on CapEx. Microsoft is a different animal because they manufacture computers and other products, so they do spend a lot on CapEx. But Palantir is mostly R&D, not CapEx. They have a really good debt-to-equity ratio, hardly any debt. They don't pay a dividend. Their free cash flow is lower than the average, higher than the median. They rank 9th in market cap, a little smaller than Block. Their price multiples look pretty weak. So if you like price multiples, they do appear overvalued. Their price to book and price to sales is better than the average though. They generate 2.1 billion of revenue, which is between the median and average. Microsoft generates the most revenue, but Square generates the most revenue as a percent of their market cap. That's what the price of sales is, 1.9. They have the most attractive price to sales ratio. Their market cap is less than 2 times their revenue. Palantir's market cap is about 17 times their revenue. And we can't look at their 5-year annual revenue growth rate. They haven't been public that long. Zscaler is number 1 at 52%. Square is at 47%. Let's go through their third quarter 10Q. We'll start with their income statement, the third quarter of 2023, third quarter of 2022, the first 3 quarters of 2023, and the first 3 quarters of 2022. So revenue is up 478 million to 558 million. Let's see if they give a breakdown of the revenue. A little more than half their revenue, 308 million, is through the government. 250 million is from commercial customers, like other companies. Their government revenue is up 12%. Their commercial revenue is up 23%. So when you compare third quarter of 2022 to third quarter of 2023, revenue up 17%. A nice thing about this company is they generate revenue all over the world. 62% is in the US, 345 million, 11% in the UK, and the rest of the world, 27%. Their cost of revenue, all the expenses directly tied to generating the revenue, is 108 million. Revenue minus cost of revenue gives you the gross profit. They have really good gross margins, 450 million. Their margins improved a lot because their cost of revenue is almost identical to last year, but their revenue went up about 80 million. Pretty much that entire 80 million went to gross profit. They even lowered their operating expenses. Sales and marketing is down $6 million, R&D is up $5 million, but G&A is down $20 million. So now they have $40 million of operating income, and they receive $37 million of interest on their investments. Income before taxes $80 million, $6.5 million of taxes. Net income $73 million. That's compared to a net loss of $124 million last year. They have an EPS of 3 cents. Last year was a loss of 6 cents. Earnings per share is net income over shares outstanding. So net income, 71 million over shares outstanding, 2.2 billion. Their shares outstanding did go up a little bit. It went up about 90 million from 2.07 billion to 2.16 billion. Let's look at their balance sheet. 3.8 billion of current assets, under 700 million of current liabilities, a really high current ratio, above 5. They have over 3 billion of cash or marketable securities. So they have a really liquid balance sheet. 400 million of accounts receivables, that's up from 258 million. So they're selling more products and services. Total assets 4.2 billion, up from 3.5 billion. Total liabilities of 920 million. They have 223 million of deferred revenue and 228 million of customer deposits. These are the best liabilities to have. This means people paid for a service. They gave this company cash, but they haven't provided the service yet. When they do provide it, then they'll remove the dollar amount from their balance sheet and book it as revenue onto their income statement. Assets minus liabilities equals equity, 3.2 billion of equity. They raised 8.9 billion from selling their business, from selling common stock, and they lost 5.7 billion from running their business. Let's look at the statement of cash flows. For the first 9 months of 2023, they generated 411 million of cash flow. Last year was 145 million. In their investing section, they only spent 10 million in PP&E. Last year, 35 million. In their financing section, they received 167 million from the exercise of stock options. So for the first 9 months of 2023, they had a cash outflow of 1.6 billion. This is their monthly candlestick chart since they started trading. So it looks like they IPO'd in September 2020, and it was pretty flat the first 2 months. Then the third month of November, it opened at 10 and closed at 27, so that's a really big month. Its peak price, which was intraday, was 45. That was the high at one point in January 2021. But then over the next 2 years, it really struggled. The stock got pretty low as $6. It's rebounded a lot since the bottom, but still trading well below 2021 levels. But at least they're finally trading above IPO price. You can see their EPS is negative each year, but for the past 12 months it is positive. These charts are 2018 to 2022, but you can see their revenue looks really good. It went from 600 million to 1.9 billion. And shares outstanding are up a little bit, 1.7 billion to 2.1 billion. Let's look at a company on Simply Wall Street. Its price is $16.53, 36.5 billion market cap, up 1% in the past week, up a whopping 134% in the past year. Let's see what they say about the company. Palantir builds and deploys software platforms for the intelligence community in the US to assist in counter-terrorism investigations and operations. They have Palantir Gotham, a software platform which enables users to identify patterns hidden deep within datasets. It also offers Palantir Foundry, a platform that transforms the way organizations operate by creating a central operating system for their data, and also allows individual users to integrate and analyze the data they need in one place. It also provides Palantir Apollo, a software that enables customers to deploy their own software virtually in any environment. They were incorporated 21 years ago in 2003, based in Denver, Colorado. Simply Wall Street is pretty bullish on this one, $28 a share. They say they're 42% undervalued. 16 analysts priced this stock at $15. Their revenue has doubled from $1 billion in 2020 to $2.1 billion currently. The forecast for 2024 is $2.7 billion, for 2025 $3.2 billion, and for 2026 $4.5 billion. I have these revenue targets in my Excel model. That's how I calculated their future free cash flows. They did have a little debt in 2019 and 2020, but they paid it down. It looks like they're debt-free. And their equity has been going up each year, which is a good sign. Equity of $3.2 billion. But it looks like their equity is cash, which is a good asset to have. but you don't invest in companies, so they have a lot of cash. The CEO's annual salary is $1.1 million, total compensation $5.5 million. His tenure as CEO is 21 years. Only one insider activity in the past year, a sell for 4,600 shares. Half the company is owned by the general public, 38% by institutions, and 10% by insiders. Their biggest shareholder is Vanguard, the well-known investor Peter Thiel. He founded PayPal, and he was an early investor in Facebook. BlackRock owns 5%, the CEO 2.5%. Then you have Morgan Stanley, Stephen Cohen. Stephen Cohen is a hedge fund manager. He also owns the New York Mets. UBS, Kathy Wood's company, ARK, Schwab, Swiss National Bank. Their employee count is up 2,400 in 2019, 3,800 currently. And the ticker trades on the Wiener Bourse, London Stock Exchange, New York Stock Exchange, Deutsche Börse, Zicha, Mexican Bolsa, Bulgaria, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.